Hi, I've been an Amazon Prime member for quite a while now, and there isn't another $99 that I spend every year that brings me more value. I'm pretty much addicted, hooked on Amazon Prime. I buy everything from small to large items, from household items to gardening items from Amazon. And I use Prime every time I do it. And I've noticed that my Prime membership does alter the way I buy. I often buy something that's a Prime item for a few dollars more than something that's non-Prime, simply because I like the convenience, the ease with which I can get those items and return them if I don't like them. But I've always wondered how, if I'm getting such a good deal from Amazon Prime, how Amazon justifies it. Is it giving away Prime for far less than it's worth? And if it's doing it on a large scale, there are 85 million Prime members. My question is Amazon making any money, or does Prime have any value to Amazon? So that is the question I wanted to examine in this session. So let's take a look at how Amazon Prime works. It's a pretty straightforward concept. You pay $99 a year, or a monthly membership for $10.99, and you get a Prime membership. Once you get a Prime membership and you shop on Amazon, any Prime item that you buy, you get free shipping. That's a pretty big saving, right? In addition, you also get unlimited streaming of video and audio on Amazon Media, and you can read books on Amazon Kindle. Sounds too good to be true. For $99 a year, you get free shipping, you get Amazon Media, and you get to read these Kindle books. So let's take this apart and let's think about how quickly this phenomenon has grown. Amazon Prime was introduced in 2005. And if you look at the growth, for the first few years, it didn't do much. I mean, the growth rate was pretty low. It didn't look like it was going to take off. It's only since 2013 that you see an explosion in the number of Prime members. And what makes it impressive is it's climbing on a much bigger base. To give you an example, the number of Prime members grew almost 20 million last year, and it's on pace to grow another 20 million this year. So Amazon clearly believes that Amazon Prime works for it. It's pushing a lot of resources in Amazon Prime, and the number of Prime members is growing. So let's take a look at the economics of Amazon Prime from Amazon's perspective. If you look at Amazon Prime from the revenue side, there are two sources of revenue. The first is the membership fee, the $99 a year, at least in the US, that you get for an annual membership, or $10.99 for a monthly membership, and similar membership structures around the world where Amazon Prime is offered. That is the revenue stream, and that's not a small stream by itself. If you take the 85 million members that Amazon has in the middle of 2017, that would translate into revenues of over $9 billion just from the membership fee. In addition, though, Amazon Prime members are wealthier than non-Prime members. They spend more on Amazon than non-Prime members. While the numbers are a little hazy because Amazon is not very opaque about revealing these numbers, by most estimates that I've seen, Amazon Prime members on average spend about $1,300 a year, whereas non-Prime members spend about $700 a year. That's an incremental revenue of $600. Now I remember my statistics, and you're saying, well, how do we know that incremental revenue is because of Prime membership? We really don't. I mean, what we'd really like to observe is what a Prime member buys versus what that same Prime member would have bought without Prime, and that's unobservable. So let's for the moment at least assume that $600 is incremental revenues because of Prime. We'll come back and re-examine that assumption. Now let's look at the cost side to Amazon. By far the biggest cost to Amazon is the free shipping that they offer Prime members. How much does it cost to Amazon? Again, Amazon is not quite transparent with these numbers, but in the footnotes, Amazon gives away a big chunk of the game. In fact, in the footnotes to the 2016 10K or annual report, Amazon revealed that they spent $7.2 billion on subsidized shipping. That's shorthand for the shipping that was involved in Prime. So I'm going to assume the entire $7.2 billion spent in 2016 was for shipping for Prime. And since there were on average about 60 million members in 2016, that translates into $120 per member. Remember, Amazon is charging $99 as a membership fee. The shipping alone is $120. Let's bring in the other costs. There are servicing costs. As a Prime member, Amazon has to provide customer service. Again, we don't know how much that cost is. We know where it's buried. It's buried in the total G&A cost that Amazon reported in 2016 of $2.4 billion. I'm going to assume that that cost was relatively modest. Amazon doesn't provide that much in additional customer servicing just because you're a Prime member. And I'm going to assume that that cost was about $10 per user in 2016. Now, here's the other freebie you get as a Prime member. As a Prime member, you're given free access to Amazon Media. And if you ever visited Amazon Media, lots of TV shows, lots of movie shows. Amazon spends a lot of money on technology and content. In fact, in 2016, this was perhaps their biggest line item, $16 billion. They don't tell you how much of that is for the content they buy for Prime membership. But again, I'm going to make a guess that it's that about 10% of these costs are because of Prime memberships. Now you're saying these are assumptions piling on top of other assumptions. You're absolutely right. We'll come back and examine the big picture. But in summary, you got shipping costs, you got customer service costs, you got media content costs. Now let's look at the final component of the cost. For Amazon to get a new Prime member, it has to spend money on advertising, on promotion. Here again, Amazon doesn't quite reveal what it costs to add a new Prime member, but their total advertising cost in 2016 was $7.23 billion. That's actually much higher as a percent of revenues than almost every other retailer. I'm going to assume a chunk of that $7.23 billion goes to attracting Prime members. How much? Again, I'll make a guess that it's about $100 to get a new member. That works out to about $2 billion out of that $7.2 billion is going into getting new members. I think we have everything we need to draw a picture of the economics of being an Amazon Prime member. So what you see here is the cost of acquisition that has led Amazon to 85 million members, $100 per member. Then you got the revenue streams, either as annual subscription fees of $99 a year, or monthly subscription fees. About 20% of Prime members are monthly subscribers, pay $10.99. And you also have the incremental revenue. And here's where you got to pause. That entire incremental revenue of $600 doesn't go into Amazon's pocket. Remember, Amazon is a retailer. It sells other people's stuff. It's only the operating margin that they make on that $600 that is an incremental profit. Now, we have to estimate that margin. And in 2016, that margin for Amazon was 9.19%. That's a lot higher than what you'll actually see in the financials. The reason it's 9.19% is I'm not counting the shipping costs yet. So these are the pre-shipping cost operating margins of 9.19%. 9.19% of $600 is the additional profit that Amazon is making from a Prime member. If you go below the line, you see the costs of having a Prime member to Amazon. You've got the shipping cost of about $120 a year. You've got the customer servicing cost, $10 a year, and you also have the media costs, that the 10% of the $16 billion that I'm allocating as a cost to keeping Prime members happy. That's the economics of a Prime member. We've built a foundation to think about valuing a Prime member. To go from those economics to valuing a Prime member, here are the additional assumptions I need to make. The first is just because you've signed up a Prime member doesn't mean that that Prime member will stay on as a member forever. So I took a look at the statistics and renewal rates, and Amazon Prime has astonishingly high renewal rates. In fact, looking at the last 5 years, at least based on estimates, and these are again outsiders making these estimates because Amazon doesn't let you look inside the data. The estimated renewal rate for Prime membership is 96% a year. If you look at the incremental revenues of $600, I'm going to assume that Amazon is going to bring its marketing powers to play on Prime members and find ways to sell them products and services on top of what they already buy, and that the incremental revenues per Prime member are going to grow 10% a year for the next 5 years. After that, I'll scale the growth down towards the inflation rate of 1.5% by the time I get to year 10. The shipping costs are where I think you're going to see the biggest difference. For most of the last 5 or 10 years, Amazon has been spending incredibly large amounts of money building distribution centers, building up its logistics network, buying delivery trucks. More and more of my Amazon packages don't come on UPS or FedEx. They come on Amazon Prime trucks. What is this all meant to do? I think it's a strategy to bring shipping costs down, and I think it'll work. And I'm going to make the assumption that shipping costs are going to grow 3% a year for the next 5 years. See, what's the 3%? Remember, the revenues grow 10%. I'm assuming shipping costs will grow at a lower rate. So shipping costs as a percentage of the incremental revenues will become a smaller number. After year 5 again, I'll scale that 3% down to the inflation rate. The customer service cost, I'm going to assume a 5% growth rate in that cost every year for the next 5 years. There's a lot of fixed costs there, so it won't grow at the same rate as revenues. And after that, that growth rate will also drop to the inflation rate. I'm going to assume that all of this is going to get discounted back at the cost of capital. Why? Because Prime members partake in almost everything that Amazon does. The movies, the books, the retailing. So the 8% cost of capital I estimate for Amazon as a company becomes the discount rate I use to value the cash flows I get from an existing member. Ready? So let's try to value an existing Prime member to Amazon. So here's how I built up to that valuation. I started with the incremental revenues of $600 growing at 10% a year for the next 5 years. That's a surge from new products and services being sold to Prime members, scaling that growth rate down to 1.5% by year 10. The shipping costs grow at a lower rate, 5%, as do the shipping costs grow at a lower rate, 3% a year for the next 5 years, scaling down to 1.5%. And the customer service costs also grow at a lower rate than the revenue growth. The net effect of this is the operating income that Amazon makes per Prime member increases over time. I pay taxes, and in this case, I'm going to make the assumption that I'm going to start with an existing tax rate of about 20%, but over time, I'm going to move the tax rate towards 25%. This is my judgment on where the corporate tax code in the US is going to end up after tax reform plays out. I discount the after-tax operating income at 8%. What I get as the value per member is a shade under $500 per member, about $491. In fact, the total value that I get for Amazon's existing members is about $41.7 billion. It's the 85 million members multiplied by the value per existing member. Now, to value a new member, I need to make more assumptions. The first assumption I've made already. I made the assumption that right now it costs Amazon about $100 a year to attract a new user. If I pause right there, remember that the value per existing user is $491 based on my earlier analysis. It costs $100. My net value of a new user is $391. I keep it simple. I let that $391 grow at 2% at the inflation rate for the next 10 years. Now here's where the bigger assumption came in. I have to make assumptions about how quickly Amazon can grow its Prime membership. Clearly, it's been incredibly successful in the last 5 years in growing its membership to 85 million. I'm going to bring the growth rate down from what it's been over the last 3 years simply because the base is so much bigger and make the growth rate 15% a year for the next 5 years. And by which point I will be giving Amazon 155 million Prime members. I bring the growth rate down to 5% because the base is going to be huge. That is going to drive the value of the new members, and the net effect you can see in the sheet. So here you have the value of a new member, which is the value of an existing member minus the $100 cost, and that $391 is growing at the inflation rate over time. You multiply by the number of by the number of new members. What you get as the value for new members is about $53.4 billion. We're almost there. There's one final component I've got to bring in. Remember those media costs, the huge item, $16.09 billion, that 10% of which I was assuming was due to Amazon Prime. It's the media and technology and content that Amazon acquires primarily to boost its Prime membership. I'm going to assume that cost will grow. It'll grow with the number of members. And what you see as the present value of the after-tax, so basically you still get a tax deduction from this cost, of the after-tax portion of this cost, is the cost of what I call the corporate drag. It's more than $32 billion. I've got everything I need to value Amazon Prime. I've got the value of existing members, the $41.7 billion. That's a $491 per existing member that I valued Amazon Prime at, multiplied by the 85 million members. The value of new members, this is the additional members that I think Amazon will add on over the next 5 years and beyond, in fact, in perpetuity. And in fact, in both the corporate cost and the new member, you probably saw a terminal value. This is the continuation of the process at a much milder growth rate. I subtract out the present value of corporate cost, 32.8 billion. This is the median content specifically that Amazon buys for Prime. What I get as a value for Amazon Prime is $62.2 billion. Now, as you look at that valuation, you're probably saying, what a lot of assumptions he made. And you're absolutely right. In fact, you could classify some of these assumptions as guesstimates, and that is exactly what they are. But remember, if Amazon chooses to reveal these numbers, they could. They have the information. One of the things that I suggested after my Uber user evaluation is we need to change the accounting rules to create more disclosure around membership, subscriptions, users, because right now companies are pretty opaque about what's going on behind the surface. As you look at the spreadsheet that contains my valuation, remember, you're welcome to change any of the assumptions that I've made that you don't like. Make it yours. The other thing that I want to emphasize here, which I think makes my value a conservative value, is often we talk about real options with no basis for those two words, real options. This is a case where those two words actually make sense. Why? Because Amazon has 85 million loyal Prime members that it can sell other stuff to. What other stuff? We don't even know yet. Amazon could sell products and services to these 85. There is a real option embedded in here that could add significant value to the 62 billion. And it gives you some insight into why Amazon is investing as much as it is in building up its Prime membership. Overall, though, I think Amazon Prime has changed business. Has changed business in what sense? It's been devastating for the rest of the retail business. Amazon Prime has been one. It's not just Amazon Prime. It's part of that strategy that Amazon used, but it's been a prime factor in that strategy. And it has changed Amazon as a company. In what way? Well, Amazon Prime made Amazon aware of how much shipping costs were. And once Amazon became aware that shipping costs were going to be deadly for its Prime membership, it decided to do something about it, as any sensible company would have. And that's why I think Amazon has spent as much as it has on logistics and distribution. In fact, if you view the world through the prism of Amazon Prime, the Whole Foods acquisition that Amazon made for 14 billion suddenly starts to make sense, right? Because at first sight, you're saying, why would Amazon want to enter the grocery business, a low margin, highly competitive business? Maybe that's not the player. Maybe what Amazon is getting with Whole Foods is a distribution system of 460 stores in some of the best locations you can find from which it can ship things. And in fact, the second wedge that it can use is there are products and services that Amazon wants to sell Prime. Who knows what they can come up with Whole Foods menu. So that, I think, might change the way you think about how Amazon invests, what it acquires. But I think Amazon Prime is key to understanding Amazon as a company. I've often described Amazon as a field of dreams company, a company that's always told investors, if we build it, they will come. And nothing symbolizes Amazon's long time horizon and its willingness to build up business than Amazon Prime. I will continue to be a Prime member, and thank you very much for listening in on me.